Hey guys, this is Andrew for TradingSenses.com. I've been working as a professional trader for the past 6 years in Hong Kong, and right now, guys, I'm doing YouTube videos because I want to pass the knowledge. As I always say, I want to show you the different tools and techniques that I use that work for me, and I know how to use them. So I want to show you guys all the stuff. So if you want to know about how actually to make money on the markets, you guys are in the right place. So today I want to make another update on Gamestop because I know that a lot of you guys have interest in the stock. So let's get into it. So guys, the past few days I did some analysis using Elliott wave theory. I did a short-term analysis, and now here I want to show you guys some levels, some targets that are actually coming from all the stuff I did before. So here, for those who have watched my video on the Elliott wave theory that I was applying here, I was seeing basically that I had one first move up here, 1, 2, 3, 4, 5. So this whole move up that then corrected. So it's from the really beginning when we started at 2, we go to 480, we correct, and now we are going higher. So let me get rid of all this stuff. All right, so this is more clear. So we have 1, 2, 3, 4, 5 that is complete. A, B, C we correct, and now I am expecting another 1, 2, 3, 4, 5. And the question is, where can we go with this fifth wave? So for now we are only in the third wave. So I think the third wave is going to 480 to the all-time high that we had here. Then we're probably going to correct, and then I think we're going to blow up this resistance with a very strong move, and that we are going to go to 800. So I'm going to show you guys why I think this is what's going to happen. So first, Elliott wave theory is telling me that this is the most likely scenario, but I have other reasons, and I'm going to give you targets. So let's start with the different reasons. So if you have a look at the short interest, so as usual guys, I go on Market Watch. So I think this data has been updated now. So I see 26%. But it's not, it's not that big. But what is interesting is, look guys, what investors are doing. So this guy, for example, Bill Gross, the legendary billionaire investor and co-founder of Pacific Investment Management, blah, 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 told Bloomberg Television that he made about 10 million US dollar betting against the stock. All right, fair enough. You want to bet against the stock, you want to get destroyed, your choice. But what is interesting here is that he's selling call options at 250 and 300, which he sees as the perfect opportunity. So guys, what does it mean? It means that the short interest that you're seeing here, 26%, is actually only the real short interest, but you have some synthetic short interest that is created by this options. All right, if you sell a call and you buy a put, you are actually short 100% of the notional. So it's another way that you can use to short stocks, and it's used by some guys like this rich investors. So guys, the short interest is not that big, but the real short interest, if you add the synthetic short interest, is probably much higher. And another thing that is interesting is that the strikes he's selling are around 250, 300. Let me show you guys again the chart. So if we go here at 480, he's gonna get destroyed. Why? Because his gamma is gonna increase. So the gamma is actually the acceleration, you can say, of the price action with the spot. So basically, the more the spot goes up, the more he is short, and the quicker he's short actually, because his delta is actually increasing as well. So whatever, I don't want to make it too technical. I'm an option trader, but it's not the purpose of the video here. What is interesting for you guys to remember is that you can have a gamma squeeze. So go check it out what it is. I can explain quickly, but it's basically this increasing acceleration, is this acceleration of the short position when the spot goes higher. And this is going to make that the short interest is increasing on the upside. So if we come close to these levels, so first you're going to have this gamma squeeze, and you're going to have some hedge funds that are short. 25% is not that low. All right, we went to 100% before, but 25% is still substantial. And those guys, they probably have stop losses around 480. So if we break 480, even if we get close to this, guys, it's not gonna hold, it's gonna get destroyed. And this is, I think, what is playing out. So now I give you targets, guys. How do I do? It's not easy. To be honest, here you don't have any past reactions, so you can't find, you know, some basic resistance level like I did for 480. You know, 480 is obvious, everybody knows it's a resistance level, but here I'm going to use fib extensions that work very well in this kind of environment. So you just measure. That's why Elliott wave principle is very useful to do prior to using fibs, because you need to know your waves. So here you know that the first wave is starting here and going here. 1, 2, 3, 4, 5. First wave. You apply this to the bottom of the second wave. Second wave is the ABC I have here. So it's like here, guys. And this is telling me that the most likely level, it can be 500, all right, if you have a one-to-one relation. But guys, if we go to 500 for the reasons I just explained, you're going to have a gamma squeeze, you're going to have a short squeeze, you're going to have the hedge funds cutting their positions. So if we go to 500, we go to the next one. And the next one, guys, is 790. Last time I said 780. Let's call it 800, guys. We are going to 800. This is my view, and I just gave you the reasons. So if you guys enjoyed this video, please don't forget to click the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to show. I see you guys.